On today's Crypto Clarified podcast, we're going to be covering the last 12 months of what's called tokenization, but that's really one segment of a rapidly changing digital asset space. I've got two guests who are recurring guests, actually. Morgan Krupetsky, who's Senior Head of Business Development at Avalanche, is here. And Maredith Hannon is back, our Head of Business Development at WisdomTree for digital assets. Welcome back to Crypto Clarified. This is the podcast where we help you navigate what is this complex and fast-moving, but very interesting digital asset space. My name is Benjamin Dean. I'm Director for Strategy in Digital Assets at WisdomTree. For those of you in the United States, check out wisdomtreeprime.com. You can find information on that website, or you can find the application itself on the Apple or Android app stores. Hit subscribe and share the podcast on Spotify, YouTube, iTunes, wherever. Subscribing is good, sharing is even better. You can find me on X at Benjamin Dean. Time for the disclaimer. Before I begin, I do need to state the following to clarify the views and opinions expressed in this podcast of those on WisdomTree and Ava Labs. They're subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. Now let's go to the BD episode. Well, if isn't two of my favorite people, Morgan and Maredith. Welcome back to Crypto Clarified. It's nice to have you both here, especially together this time.
Yeah, thanks for having us. I'm excited to dive in.
Yeah, thanks so much for having us again. Great to see you guys.
Now, as I was preparing for this episode, I realized Morgan, Senior Director of BD, Maredith, Head of BD for Digital Assets, WisdomTree, and then my name, Benjamin Dean, BD. So I was thinking, well, this must be the BD episode, right?
It is. It is. We love it.
Now, because of your roles at your respective organizations, you spend a lot of time out there meeting people, which is great for extroverts. Some of us need to charge social battery in these kinds of situations. But it does mean that you get to see a lot of interesting people doing interesting work as part of the day job, really. So this episode, we're going to kick things off. And Morgan, I'd look to you first. In the last 12 months, we've seen a lot of activity as this tokenized asset technology space has started growing, and it has grown substantially. What are some of the things that have jumped out at you, given all the people you've met and all the work that Ava Labs has done in the space?
Sure. I'm happy to kick it off, and I'm sure, Mary, you've seen a lot too, so I'm sure you can add in. I would say the interest in RWAs or tokenization definitely has continued this year and probably will in years to come. I think the concept kind of regained in popularity 2 years ago from when the whole like STO craze was happening years before then. I'm happy to talk about maybe like what we saw that kicked that off and why potentially this time is different. But in terms of areas of focus, I would say the interest has really been kind of across the liquidity spectrum. On the one end, we continue to see the proliferation of what I would call tokenized cash and cash equivalents. So whether that is incumbent institutions and or startups doing everything from stable coins, tokenized deposits, wholesale CBDCs, what people are calling yield coins, as well as tokenized money market funds. Literally everyone and their mom are launching tokenized money market funds for a variety of different reasons, and we can kind of go into that. But at a high level, I think the market cap of $170 billion of non-yield bearing stables on chain today has really caught institutional interest, especially that of asset managers, as they really look to potentially proliferate their money market funds and then other products and services into the on-chain ecosystem. And then again, we can kind of talk about why that is and what that looks like. On the other end of the spectrum, we continue to see a lot of interest in the tokenization of private market assets, so private equity, credit, real estate. Really, the thesis continues there that using a combination of tokenization, blockchain, smart contracts, you can really ultimately create efficiencies that ultimately make lower investment minimums economically viable for asset issuers and really get into the hands of this kind of continuously growing mass affluent accredited investor market in the US as well as globally. And then the third kind of spectrum that we're starting to see increased focus on is still more on the illiquid side, but it's this crop of, I would say, like vertically integrated blockchain-based fintech originators. So similar to you have Figure today on chain, similar to the off-chain versions of SoFi, Lending Club, and others that really kind of gained in adoption and scalability post global financial crisis. It's a very similar model, but obviously leveraging the capabilities of blockchain tokenization and smart contracts to really help, in this case, originate loans, whether it's for individuals or businesses. And so at a high level, those are kind of three areas. We're also seeing a lot of interest in what I would say the tokenization of culturally relevant assets. So sports, film, art, collectibles, things like that. But Mary, I don't know if there's anything you would add, but that's kind of how I like to lump them together in terms of different categories.
I think you're absolutely right, especially from the assets that we're seeing. And I think if you went back 2 years ago, and would love to hear your comments around how that all started, but I think we heard a lot about private assets. And then I think a lot of asset managers, banks, larger institutions said, hold on, there's all of this on-chain cash or cash equivalents, like you said. How can we bring, like we do in the traditional banking system, more products on-chain to really meet the demand and really solve a problem for these crypto native firms? So it's really exciting to see that. And I would also just add to, from an actual tech implementation perspective, I think we've heard a lot more around identity. And I think that goes to why so many asset managers and banks have now come on chain, is because there's a greater understanding. And I think a lot of education has been done about what is actually happening on chain, who is actually involved, the ability, and I know, Ben, you've done a lot of episodes on this, but the transparency and truly the ability to record, which is a natural feature of blockchain, how that is actually really viable within the traditional financial system, and how that can actually be a benefit versus a deterrent, from where I think people 2-3 years ago thought that it was a lot of criminals and it was a lot of bad actors, when actually there's a lot of ability to be able to trace what is actually happening on chain in terms of activity and the source of funds. So I think that education piece of it, and the ability to then really understand security and identity on chain, there's a lot more work to be done there. But I think those, in addition, have really fueled these other asset managers and banks to be able to come on chain and to meet those needs, just from a base level tech perspective.
Yeah, I think one of the four things that I always point to in terms of like why this time is different is this time around, there's definitely much more kind of institutional grade infrastructure in place. And so, yes, the ability to, you mentioned the technology with transparency ultimately allows for, if anything, more proactive compliance risk management and transaction monitoring. And, obviously a lot of people are focusing on digital identity and verifiable credentials on chain. But in addition to that, we've seen obviously the proliferation of greater kind of custodial offerings, compliance, security, tokenization platforms, one of which obviously you guys run, as well as interoperability solutions, which were really top of mind last year. Plus this year, I think in addition to digital identity, a lot of people are focused on privacy, actually. I think, my view is actually it's been great to see institutions coming to the space as asset issuers. But where I get really excited is where we're starting to see institutions as asset purchasers on chain and deploying kind of capital and liquidity on chain. And I think we could talk about where we are there and why we haven't totally seen that so far. But one of the reasons, I think, is we really need to have aspects of privacy that exist off-chain in traditional markets today in order to really be able to see kind of institutional levels of capital. So whether that is wallet and balance privacy, transaction privacy as it relates to sender, receiver, so on and so forth, like all these things from a privacy standpoint exist in TradFi, we really need to start seeing these solutions develop to really start to see institutional levels of capital from the institutions themselves. But I think it's all, to your point, happening and being worked on and being developed, and it'll be exciting to see kind of how the space evolves over the coming year or two.
And I think you bring up a really good point too around institutional use cases and retail use cases. And there's very, very different, both from a transaction level perspective, a volume perspective, but also a baseline chain level, that it's important that there are differences because they're very, very different use cases. From a retail perspective, privacy may not be as important necessarily versus if, a Goldman and a Broadridge or a JP Morgan and a Broadridge are doing repo transactions, that does make sense that there's privacy there and what that looks like. So I know Avalanche has some capabilities there, even from an L1 perspective. I think that would be really interesting to talk about too, for how you guys have been able to ring fence those per se.
Look at Maredith just setting me up for questions.
I try my best.
They're not softball questions, though. There's curveballs that come from Meredith. So quite devious with those. Just be warned.
Meredith's going to ask you, Ben, some of those questions.
Yeah, exactly. You're up next. Don't worry. You thought you were the one asking the questions.
No.
No,
totally.
No.
Yeah, so I think, Ben, you mentioned like Maredith and I have both been on the show before. So I think just the audience could definitely kind of go back and learn more about Avalanche as a platform, but maybe just as like a high level overview, I would note Avalanche is not, as a network, it's not a single monolithic blockchain like an Ethereum or like a Solana, for example. It's really a network of many layer one networks that are uber customizable and that are inherently natively interoperable. And so what does this mean? This means that obviously if you're a gaming developer or a payments company, a government agency, or a financial services institution, obviously you're going to have very different reasons for why and how you're leveraging blockchain technology. And the L1s within the Avalanche environment basically allow you to kind of customize, cater to, and really optimize for your particular use case or application. So in the case of this discussion of tokenization, most of the things that we're talking about for the purposes of this call and our meetings are tokenizing of financial assets, which means in a lot of cases they're securities and require KYC or investor accreditation, holding periods, things like that. And so one of the kind of customizations from an Avalanche standpoint, it really allows you to embed that KYC at the chain level. So today within the EVM and other worlds, a lot of the compliance kind of requirements are reflected at the token level and or at the wallet level and or at the application level. With Avalanche L1s, they allow you to kind of bake that permissioning into the blockchain level as well. And then there can be a variety of different DeFi applications. Let's say an AMM, a borrow lend protocol, and other things. And because you have this permissioning embedded at the chain level, it allows you to preserve that composability and liquidity really across a more holistic DeFi ecosystem that really is the innovation of DeFi in a way that doesn't allow you or require you to compromise on the compliance or the KYC component. So there's a lot of different things that bringing that KYC or that compliance down to the chain level allows for. And we're really starting to see teams, again, whether from a tokenization standpoint or others, really start to take advantage of those customizations and those capabilities. So we'll definitely continue to share more as different projects launch. But thank you for teeing me up on that, Maredith.
Now, is there playing devil's advocate as I want to do? Back in the day, Bitcoin comes along, Ethereum comes along. There's a bunch of things that try to kill Ethereum, none succeed. That's part of like the evolutionary process with new technologies. And Morgan, you said it before, like some organizations, they need it configured in a certain way, others don't. So you want it composable in the sense they're like Lego blocks, but at the same time, sometimes it just can't be done at a technical level. Is there a risk here where the ecosystem becomes so fragmented, different organizations, even of the same kind of category, you could say, it could be financial services, it could be gaming or something, they each go with a different solution that doesn't speak to the other one, and then kind of the benefits of an open network, distributed database, then that starts disappearing. And this is me playing devil's advocate, but it is one of those things that is kind of an emergent property of this complex system, an evolving system.
Yeah, so I think short answer is yes. Long answer is, I think if you ask anybody, no one's going to tell you that they don't believe in a multi-chain future. So I think having that in mind, that's why interoperability has and kind of continues to be top of mind for all different types of applications and institutions and startups. And what's more is not just this interoperability, but really having the infrastructure, well, whether it's at the wallet and like UI level or application level, that really obfuscates all of that kind of underlying, whether it's bridging or message passing or whatever it is, to really kind of create for a seamless user experience, being able to still benefit from all those things that you mentioned as it relates to composability and other things. So I think like you can't build an application without having the concept of interoperability in mind. It's definitely easier from an EVM standpoint, where for some reason, if someone makes a bet on an ETH L2 or an Avalanche L1, and if for some reason that doesn't exist anymore, it should be very easy for them to kind of lift and shift or port over their solution to another EVM-based chain. But I think as the space evolves, like that is definitely something from like an ethos standpoint, people need to continue to kind of have in mind and go from there. And part of it also, especially when we talk about tokenization of financial assets, a lot of the issues to date in terms of KYC portability or like secondary market trading or borrow lend, like a lot of those things are actually not or no longer technological hurdles. A lot of these things are still regulatory hurdles as it relates to, for example, lack of consistency in certain regulations across various jurisdictions, which preclude things from being able to seamlessly trade from an individual in one jurisdiction to another. Things that are definitely more, again, like regulatory hurdles rather than technological hurdles. So it'll be interesting to see kind of how the space evolves also from a regulatory standpoint. Meredith, I'm sure there's other things that you would add there.
Yeah.
We could like talk all day on this.
I know, right? This is with our backgrounds. I just really want to, Morgan, you're absolutely right. I want to underscore that. I think there's two dimensions to this. And then the third dimension is still the regulatory jurisdictional considerations too, where just like today, if you have an ETF that's traded in the US, it is not the same as the one that's traded in Japan or in Europe. There's different underlying structures, there's different liquidity pools, and that's still true today too. Implementing this on chain doesn't remove any of those hurdles. It actually adds another layer of complexity, but I still think that the use of the technology will get us there where it won't be as manual on the back end, and we'll be able to pool more of those over time. Obviously, that's a long journey, but I totally agree with you. I think that's where our funds are still set up out of the US. They are still under the regulatory considerations of the US. If we would do other ones in Europe or in other jurisdictions, they would be under those rules and regulations. And as we know, globally, like with any laws, they aren't the same across the board. So the US has its own specific ones versus select countries in the EU have put out some. Same thing with those in the Caribbean. So there's a lot of different options here for how to set up and structure funds. But again, that doesn't necessarily mean that they all have the same considerations and that they can be traded easily across each other, or even have individuals have access or institutions have access to the same pool of investments, depending on where they are. So definitely a lot of work to still do. But I think the advancements that we've made, even especially in the last year, have gotten us closer to be able to to your point, Morgan, it's not the technology that's the issue anymore. That we would definitely be able to do. It's now getting the regulations up to speed to match technology. And I know this is something that Ben has talked about a lot, where it typically is the regulations follow the technological advancements, and it takes some time for the lawmakers to catch up with technology. So I'm hopeful that that'll be happening over the next few years.
Well, one of these days, I'm going to get you two to disagree on something, and it might be a cold day in hell, but like maybe talk religion or politics or something, just so we can really.
We're just like really far down the rabbit hole.
We are. That's the thing. It's very, very far down the rabbit hole.
Like,
that
we're so far down that like the rabbit hole looks like a dot.
Now, technology history time. I'm looking at a book on my shelf and listening to you speak about the technology being there, though somewhat different. It reminds me of railways, where they had different gauges. And then people laid down railways sometimes based on law, and then the railway would hit a border somewhere and they're on different gauges. And then you'd have to do this interoperability thing where you basically pick the train up and drop it on the next set of tracks. And eventually everyone converges on similar standards for different purposes, which is what you've been talking about.
I like that. I'm going to use that example.
It's very true. And we're seeing that too from a standardization perspective. That's something that I think is talked about a lot. I feel like the theme of last year was interoperability. To Morgan's point, we're here now. Now we're talking about standards. And then I think as we go on, whether that's standards in identity, standards in, we already mentioned EVM compatibility, I think more of those themes will emerge as we start to really try to get to mainstream adoption here.
Yeah. And maybe some of the laws and regulations will converge over time, which is where I started my career at OECD. It was literally about coordinating economic policies, right, amongst other things.
And some of the securities regulations haven't been changed for like decades.
Yes.
So
bit by bit, but there has been a lot of positive news. I'm glad you brought up the obstacles already. Knowing how long we can go on for and knowing time limits, this is the part where we get to talk about the future. We've just alluded to it, but it can be around tokenization. It can be around the technology regulations. It could be disagreeing about if the sky's blue or not, if I can get you to disagree.
Ben really wants us to disagree.
Ben's like, fight. No, it would probably be me and Morgan fighting against you, Ben, not Morgan fighting against each other.
All right, I'll stop.
We find something.
You know, we should bring Jason on here. I'm sure we can get a good debate going with him.
There we go.
But I'd have to disagree with you on that. He's a very agreeable person. So let's not do that. Think about the future, and we've touched on a few pieces, but it can be in this broader digital asset space. It could be about what you work on specifically. It could be one of these out there ideas you've seen come up where you go, in 5 years that might have a future. I leave it open to you. It's an open-ended question, but whatever you think is interesting from where you sit and who you get to meet, I'm sure the listeners will find interesting as well. Morgan, I invite you, but of course, Maredith, vehemently disagree.
Okay, not a problem.
I was going to say, Mare, why don't you kick it off? I feel like I've been talking a lot.
I'm happy to. No, we both have. It's great. I would say I know we've touched on this a little bit for digital identity. I do think that I'm not sure what way, shape, or form it'll take, but I do think over the next, I'd say, aggressively 6 months, probably more realistically 12 to 18 months, there will be some sort of agreement, whether it's a standard or whether it's even a method for digital identity and verification. I do think that that's very important. I don't know if it'll necessarily be at an L1, L2 level that it's implemented at, or even just we launched soulbound NFTs. I know there's other types of ways for us to be able to do this, but I do think more and more that will be really a focus of the future of how do we start to think about identity, and again, still doing it within the confines of privacy, because I do think that's important. But as we've seen with zero knowledge proofs, whether it's a 1-0, and then on the back end, this is where asset managers or banks are working together from a reliance perspective, that might be something that's interesting. And I do think that that's one of the big hurdles here, and really a key piece to growth is to say, how do we easily get mainstream adoption on chain? And that also means potentially abstracting away the difficulties of the blockchain, but still enabling identity and usability to be there from a utility perspective, even just using these assets in a new and different way. But being able to identify the underlying holder and then enabling them to do, whether it's secondary trading, whether it's even just access to new, Morgan, you mentioned privates, private investments. I think that's something that is also really interesting that will then just lead to more and more adoption. And from there, I think there's going to be a lot of work around just how we start to think more broadly around these assets being able to be, whether it's traded across borders or whether it's even just within different pools of capital, that I think is pretty interesting. So I'd say the big thing for me in my mind is, how do you solve this identity problem? And how do you solve it in a way that it isn't issuer by issuer, but there's actually something that more broadly we can work on together as an industry. And then from there, I think there's going to be a lot of ripple effects of how that's going to make processing this business even easier from a transaction perspective.
Ben, I don't disagree. I'm sorry. However, I will add.
That's unexpected.
I will add. And let me bear with me. Let me tell you what I'm excited about in the context of what I'm excited about right now, which is this past week we had this game launch on Avalanche called Off the Grid, powered by a gaming studio called Gonzilla Games. It is a game that is on its own Avalanche L1. Importantly, you can access it via Xbox, PlayStation, and your PC. And you can't even tell that it's using blockchain. How is it using blockchain? All of the and I'm not a gamer, but like it was really cool to see some of like the demos. Every single part of your like skin, your outfits, your weapons, all of the mini parts of the weapon, they're all NFTs. But there's no component of like blockchain in your face at all. And if you haven't checked it out, highly recommend checking it out. But within the past week, there were basically 4 million wallet addresses that were connected to this game within 1 week's time, and 3.5 million real player transactions on Friday alone. And so
that's cool.
It's so cool because it's like all of the things that we've always been talking about as an industry. And why I bring it up in the context of tokenization is, Meredith, you mentioned earlier tokenized assets as meeting a need for crypto native institutions. What's really exciting for me is having tokenized assets reach the masses, the liquidity that's off chain today, via integration with traditional distribution channels. So whether that is offering tokenized assets via your Fidelity or your Schwab app or Robinhood, and having the end users not know or frankly care that something is tokenized, but like now they can just like, realize X amount more percent of passive income by providing liquidity into a pool via their like stock holdings, or being able to buy fractional shares, or being able to borrow against them, being able to swap like Google for Apple atomically, like all of these things.
Or it's just faster and there's less,
or it's faster and yeah, totally. And like the fees, the management fees on privates, or being able to access privates now at much lower investment minimums, like all of these things that like the business capabilities or the things that you can now do, the so what, just with the tech as an enabler on the back end, is the things that I'm really excited for. And it's very hard because, to what we were saying earlier, it requires integration, not just integration, but interoperability with traditional Web 2 rails. But we're starting to see signs of that. Definitely in the Avalanche ecosystem, but I'm sure like in the space more broadly, where we're seeing, and frankly, this is the work that we were doing last year with you guys and with JP Morgan, integrating this tech into, in that case, the JP Morgan Wealth platform. But the more that like we can see this, and I think we'll start seeing it more and more over the coming years, that's what really gets me excited.
Absolutely. And I think that's not to talk our own book. This is a lot of what we've focused on, though, as well as really making it easy, simple, and again, abstracting away all the complexities of the on-chain setups and enabling you to just access funds, information, products way faster, or maybe it's cheaper, or maybe it's being able to swap them. I mean, there's so many opportunities here for what utility could potentially mean, or it's using them to pay for your daily coffee, right? And not having to again do that conversion from a financial asset into fiat to then do another action, but really eliminating that middle step. And I think that's where it seems so small, but it's actually really, really monumental and could incrementally change how you deal with your money on a day-to-day basis or what you can access. And completely agree. I think that's what's really exciting. And the fact your example of a game where it looks and feels like anything else, you would have no idea. I think that's where this is actually being used in the way that it was meant to be used, that it's building out, the underbelly of a system, whether it's a financial system or a gaming system, to just power it better than what you could do today.
Totally. The tech is just like an enabler. It's like when you think about it, it's like very boring, as it should be. It's plumbing, it's back-end plumbing, right? It's like, how do we just make, to your point, things easier, faster, better, cheaper, whatever it is, just leveraging the back end. Like one of our partners who we work with, who's focusing on the stablecoin space, he always uses this analogy to say, over the past 2 decades, we've seen innovation with like fintechs where all of the innovation has really just happened on the front end in the UI, right? And the back end, these companies like Stripe and others and Plaid, they're just connecting the traditional back end plumbing and spaghetti, but there's really not been innovation in that back end spaghetti. And so this tech just really allows finally for the back end plumbing to finally be upgraded. And that's the thing that kind of allows and really enables all this stuff that we're talking about to happen.
Yes, and to catch up with the now instant ability that the internet has brought in everything that we do versus now the actual back end is on that same time frame as what we're able to see from the front end. And it's really exciting.
And I guess for like Gen Z and millennials, the love for instant gratification.
Absolutely. People say 8 hours. Excuse me, what? No, I want this 5 seconds ago. This should already be here. Come on.
You're very patient, Maredith.
I know. I am. It's true. And honestly, I'm going to go off on a tangent right now, but ChatGPT AI has made my poor friends and family over the weekend. Someone asked a question. I'm like, let's just look it up. Let's just find the answer. Here we go. Instant encyclopedia everywhere you go. It's so much fun. It's what we all.
Ben, we're actually bots.
Not agreeing. We've been coded to agree to each other.
I've been speaking to a front end for ChatGPT, 2 of them.
Yeah, exactly.
Pretty much.
Well, that explains it. At least the training data isn't 2 years old.
There we go. Very true.
From the last couple of months, so you're actually better than ChatGPT. Yeah, clearly. Now, we are at time. I do have to say, Morgan, the gaming one, that's World of Warcraft 20 years ago. People used to buy and sell World of Warcraft gold, right? It's like it was a digital commodity that people bought and they harvested, bought and sold. So it's not a new idea. Then Mt. Gox, the exchange. Who knows why it was called Mt. Gox?
I actually don't. ChatGPT might know, but you're faster.
I knew this once.
Magic the Gathering online exchange.
Yes.
Oh, yes.
And people started using Bitcoin to do the exchanges, right? That was why it became such a big exchange. Part of the reason Carpellis ran with it. But that idea of what are you using the technology for? Nobody really cared. Some people cared about the Bitcoin or about how you bought World of Warcraft gold. But what you really wanted was the World of Warcraft gold or Magic of the Gathering cards, or in this case, whatever it is that people like. So anyway, that is actually really interesting. Thank you for sharing that. It's not obvious. But we are at time, unfortunately. And again, this is second time around. There can always be a third time down the line. Thank you for sharing your thoughts today. Always informative and very agreeable.
Thank you for having
us, Ben.
Really appreciate it.
there you have it, the BD episode. Maredith, Hannon, and Morgan Krupetsky. US listeners, Wisdom Tree Prime, go to the website. You can find the app on the Apple or Android app stores. You can find me, as always, at Benjamin Dean on X. I hope you enjoyed the discussion today, as agreeable as it was, and I look forward to seeing you again here next time.